Greetings, members, one and all of the Salivation Nation. Gold and silver are getting crushed. We're going to discuss 2 reasons why, and possibly a third. Let's explore! You're looking at it right now, the tail of the tape. In midday trading, gold and silver are down fairly substantially for 1 day's action or a half day's action. Over 1.6% drop for gold, with a low during this period of $1,798.20. In fact, that is kind of what we're seeing below $1,800, that psychological level. It was a high of $1,815 and 70. Right now, it's sitting just above $1,800 an ounce. A strong psychological level for gold, and that barrier could be broken when it's all said and done. Silver is down almost 50 cents an ounce, over 2% drop for silver, comfortably below the $23 level. Platinum and palladium are also moving downwards, and palladium especially has taken the biggest hit of all, down $61, and over 3.3% drop. So let's talk about some of the reasons why. I did get a market alert from Kitco that said the 2 biggest reasons are bond yields, strong bond yields, and more importantly, the dollar index. As you know, the dollar index goes up. Immediately we see gold and silver usually go down. It's not always the case, but it does happen from time to time. Market Watch is reporting about this. Gold prices trade lower to start 2022 after posting the sharpest annual fall since 2015. And I posted a video earlier this morning that talks about gold and how it's really kind of uninteresting right now. And that was before this big dip when I recorded that video. But I hope you will watch it because I think that should give you some insight and maybe hopefully encourage you as you press on with these movement and prices, dramatic moves one way or the other. The best thing to do is just to kind of hang tough with gold and silver, and don't let it dissuade you from your ultimate goal, because you know that price and value are 2 different things, and if you can find opportunities to buy when the prices are low, you should do it. Don't operate under Salivate's law and make a purchase before the prices drop. But sometimes you never know, it can happen. Gold futures on Monday started to trade in the new year on the back foot, with prices moving lower and barely holding above $1,800 in the wake of rising stocks and treasury rates. The slide for the precious metal, however, comes as a seasonally strong period of buying in precious metals is expected to commence. So therefore, the stronger demand potentially would mean higher prices. The December through January period is historically very strong for bullion, which has gained in 8 out of the last 10 Januaries. So there is hope there if we look at history as a guide, although history doesn't always repeat, but it certainly does rhyme. Today there isn't much on the economic calendar. Markets will remain closed in the U.S., in the United Kingdom and Canada, so trading volumes will be thinner than normal. Metals markets were open on Friday on New Year's Eve, but some international markets remain closed in observance of the New Year's Day holiday, and they were up. We saw it go up 9%, or 0.9%, leading up to 2.9% monthly climb, and prices advanced around 4% in the final 3 months of the year, according to FactSet data. Gold futures based on the most active contract notched the sharpest yearly drop, down 3.6% since the metal ended down over 10% in 2015. February gold hasn't been able to trade over its 400-day moving average of around $1,826.10, and that has led to a fall in prices, according to Chintan Karnani, Director of Research and Insignia Consultants. The very low fatality rate and low hospitalization rate due to the Omicron variant of the coronavirus will reduce safe haven demand for gold. So that means that the Omicron variant definitely will turn out to be Hopefully, much less of a burger. Not a nothing burger, but nonetheless, it could affect the economy if people are out sick for a few days and this thing spreads like crazy, but more likely, people that get it have mild symptoms, which is definitely good news. February gold would need to trade over its 200-day moving average of 1806 and 40 on a daily closing basis to be in the short-term bullish zone. Failure to do so can result in a more sell and a renewed increase in short positions. Looking at our article from Reuters in the European markets, let's take a look at it from that angle. Gold slips from 6-week high on equity strength. So that is kind of part and parcel with kind of the bond yields and the strong dollar. Part of those two reasons, that strong dollar and bond yields. Gold prices slipped on Monday as higher bond yields and rallying equities weighed on the metal's safe haven appeal as the new year gets underway, pushing it down from a 6-week peak hit earlier in the session. Spot gold fell to $18.23.63 an ounce by 11:31 at GMT, having touched its highest since November 22nd at 18:31.62. U.S. gold edged 0.1% down to 1826.40. The small setback in gold prices is likely driven by positive risk sentiment as gauged by rising equity markets, said UBS analyst Giovanni Stanovo. And keep in mind, we're kind of in the middle of the day here as we look at these prices, but it's a pretty big drop for a half day, I would say. Stanovo expects rising U.S. interest rates and declining U.S. inflation over the course of 2022 to weigh on gold and forecast a price of $16.50 at the end of the year, not far off from what J.P. Morgan has predicted. Gold prices ended 2021 down 3.6%, for the biggest annual decline since 2015, as we mentioned earlier. Despite surging coronavirus cases, the number of deaths and hospitalizations from the Omicron variant are comparatively low, which is good. We talked about that before here too. So it is interesting to see what's going here. It talks about here how the dollar has ticked up against its major rivals as an upbeat market mood lifted European equities and government bond yields. We've seen the dollar starting the year on a strong footing and putting a little bit of downside pressure on otherwise upwards moving gold price, said independent analyst Ross Norman. What seems to be holding up the gold market continues to be the physical investor. Very important, and I've contributed to that when the prices were much higher here last night. I made a purchase on a live stream. Crazy. Referring to the market for coins and gold bars, from what Norman said. However, he added that this is not sufficient to propel institutions into exchange-traded funds or futures markets where some hefty liquidations and redemptions have occurred. And so that's just it. Us physical buyers, we're doing our part, but likely what we do has very little impact on the price overall. And I think the silver squeeze movement kind of was an example of that. Had some for a brief amount of time, and there's premiums going up, but I believe the motivation to buy should be for your own personal wealth preservation, understanding where things are going in the future with precious metals and with the dollar and the economy. We'll see here. Anyway, so there that is. Now the third thing, the possible third thing, as we look at these prices again as they fall. Now gold, well, gold's barely hanging on to $1,800 as we speak. Silver down solidly under 2% here. And if these prices may hold for the rest of the day here, a good buying opportunity, potentially, if you can find a good deal under spot. And I think if you're going to buy when the prices are low, just be careful. Shop around, find the best deal for the most liquid silver you can find. That's really the bottom line. Same thing for gold too. And so, but nonetheless, what is that third thing potentially that could be why gold and silver prices are getting crushed today? Well, it could be, from what I've heard from several of you in the community, have reported that the Basel III implementation by European banks, especially the Bank of England, has been postponed another full year. Now, I did a little research and I could not find anything reporting that. And most of this stuff has been kind of baked in some of the prices. A lot of the Basel III news that we talked about last year and the full implementation really was a nothing burger in terms of affecting the price of gold and silver. And I think part of the reason for that is because the central banks and how they interact with each other really has no effect on the market in general, and some of the reason why people accumulate. So I don't know that that is a reason why, but potentially it could be that, hey, the current system as it is, where you can have all these derivatives, and the derivative trading can happen between central banks, can still occur, at least for some of the bigger banks in the European Union. Well, that means that these prices can free flow, and what happened, and so the market's reacting accordingly. So you can trade cheap ETFs of gold and silver for a whole nother year, or they can. So that's going to mean that more of them are out there, lower price, which is all the more reason to accumulate physical. Sooner or later, these regulations will tighten. But as to whether or not this has actually occurred, I'm not sure. I've not seen a source on it, and a little bit of the research that I've done on it. I've not actually gone to. I figured that somebody would post about it in the news, but I've not seen it. But does not say that it didn't. Does not mean it didn't happen. I just have not seen it yet. But this could be a potential, although I highly doubt it, reaction to that. We'll see. But nonetheless, there it is. The news midday here. Let me know what your thoughts are about gold and silver's price drop. Are you in a buying mode when this happens? Or are you going to just hang on there? I'm kind of all spent out now. But nonetheless, it is what it is. Whenever you make a purchase and the price drops, I know it's something you have to live with. And it's tough sometimes, a tough pill to swallow, but that's part of what it means to buy. And that is when you have to just look down the road. Because you know what? Whenever we spend and have our money and we incur more debt, and the government incurs more debt, they're kicking the can down the road. Whenever we buy precious metals and the price drops for any given period of time, we're not kicking the can down the road. We're shoring up more cans, and we are strengthening the cans. It just looks like a collection of cans for now, but nonetheless, in the end, it will pay off if you play your cards right. And that is the bottom line with silver and gold. That's how you have to look at it. Do not be deterred by these price drops if you've made a purchase when the prices were up and they start to go down. And I'm cautiously optimistic for where things are going with gold and silver in 2022. We'll see how it plays out. Again, I want to wish you all a happy new year. I want to thank you for taking the time to watch this video. And I want to encourage you to please rate, share, comment, and subscribe, and extend a multitude of gratitude to you all.